Let's take it across to CA Rudramurthy joining in on the show right now. Rudra, hi, morning. Yesterday, of course, it was Reliance doing the magic, but today the Gift Nifty is indicating a very quiet start. What do you think we have in store for us?
See, for me, if you see last four trading session, Nifty is taking resistance at levels closer to the 24,350, 24,370. So for me, once we cross 24,400, then decisive move on the upside till 24,800 can come. And also keeping in mind the escalations happening at the border, and also market is definitely worried on the uncertainty and the extent of retaliation. So one has to definitely have lower exposure, lower leverage, and you have to be in larger cap in general. And if you get any dip because of that escalation, it is definitely a buying opportunity. One has to clearly understand the overall structure of the market. From October to March, it was a sell on rise market. Every good news was also not getting discounted on the positive side. But right now, the entire texture has changed. We are now on a buy on dip market. Screen is clearly telling even a bad news and you get any dip because of it is a buying opportunity. Do understand, market is always a future looking animal. We can't see today's fundamental and today's stock price. Market will discount either a quarter or 2 quarter much ahead of what the reality is. So for me, it is very clear. This is a buy on dip market and not a sell on rise market. Stay in large cap. Use any dip because of escalation as a buying opportunity. And levels to watch, Nifty now has a very strong support at 23,800. Even the Friday's low, what we see, was at 23,847. So every dip till 23,800 is a clear buying opportunity. And similarly on Bank Nifty, the level is 53,800. So at current levels, have a lower exposure, lower leverage, and be only in large cap. Any dip, if you get in market, use it as a buying opportunity. Markets will be very sector specific and stock specific as of now.
Right, okay. Kunal, hi, good morning. What is your sense? A big move yesterday led by Reliance. Can we replicate that, or do you think it's going to be a more sedate day today?
I think it should be a more sedate day for the markets because you don't have too many large cap cues as such. But then I think what this move from Reliance Industries and the last couple of days of the index moves have shown us is that the index is trying to define a range. So 23,800, 850 is where we tested on the previous week Friday. And then yesterday we made a high back again to that 24,300 plus mark. So we're trying to define this 500, 600 point range for the Nifty and 55,000 as a broad support for the Bank Nifty. The outperformance of the banking stocks continue. I think that's going to be the hallmark of this rally. It's already been a ferocious 5,000, 6,000 plus point rally for the Bank Nifty from 49,000 mark to 55, 56,000, which we tested. So I think on the back of this, on the back of strength from a major sector, and then strength coming from large cap names like land industries, the trend for the index is on the upside. So I think it's more of a wait and watch kind of a market where you look out for dips like what we saw in the previous week, and that could be a good opportunity to try and add up more longs. What also happened was many of the large cap names like Reliance Industries yesterday managed to come back above the 200-day moving average. So when you have many number of stocks which are trading above their long-term averages from the benchmark indices, that trickles on to a much more stronger confidence from traders to hold on to long positions and look out for more trending nature stocks as well as in the overall sectors. So that's going to be another positive for the market sentiment.